Yeah. Good evening, students. Sorry, good afternoon. Hello, anyone? Yeah, good afternoon, students. Today our topic is the Indian money market. So, what is the Indian previous class? We know the types of banks, Reserve Bank of India, and the other topics related to the money and banking. One minute. Yeah. Yes, friends, Indian money markets related to the money and banking. Money and banking. So, money market is the nerve system of the center of the financial services, financial systems, as well as organized with the money market is the basic of the effective monetary policies. Money market mobilize the savings and savings from the different source of sources and make them available for the investment. It is the mechanism through the which funds flow from the surplus units deficit units in the economy. So what is the money? So meaning of money. Financial markets are punctually classified into the two types. One is the money market, second one is the capital market. What is the money market? This classification is on basis of the term of the credit. So money market can be divided two types. One is the money market and capital markets. So their classification is based on the term of the credit. Whether the credit is applied for the short period or long period, that is money market of institutional arrangements and which deal with the short-term funds, capital markets, and the hands of the deals in the long-term funds. So simply we say money market provides the short-term loans and the capital market provide the long-term financial necessities. So money market is the short-term credit market which deals with the relative liquid and quickly marketable assets such as the short-term government securities, treasury bills, and the bill of exchange exercise regarding to the related to the money market. Next, according to the Croton, the money market is a collective name given the various firms and institutions that deal with the various grades and near money. The Reserve Bank of India defined the money market as a center for dealing mainly or short-term characters in the monetary assets. It means the short-term requirements of the borrowers and provides liquidity or cash to the lenders. So this is a uh, money market. The money market does not refer to any particular place. Money market does not require any particular place. The transaction between borrowers and lenders in the middleman takes place through the telephone, telegraph, mail, and other agents, etc. No personal contact between the two parties in essential conducting the transactions. So this is introduction of the money market. Next, what are the functions of money market? The main number one, it is a link for the lenders and borrowers for the short-term funds. It is a purely market for short-term funds or a financial assets, purchase of the financial assets. It is provided, it is provided the working capital requirements, it is provided working capital requirements of the industry, trade and agriculture and the small farmers, etc. Next is it provides financial assets with a height of a degree of liquidity, call money market, treasury bills, commercial bills, etc. By developing a bill market and acceptancy market, it helps trade and commerce. Next, it is an important function. Treasury bill market enables the government to raise the short-term loans. Next, as well as develop the money market, makes the monetary policy and effective the people. As well as next, as well as develop the money market, makes the monetary policy and effective is. Next, it provides the opportunities to money market. Market makes the monetary policies effectively, and it helps the central banks in maintaining stability of the value of the currency units. Next, structure of Indian money market. The structure. So, definition and functions is over. Now, structure of Indian money market. Structure of Indian money market. So, the Indian money market, so the short given below, I will send later through WhatsApp this charts. So, here Indian money market can be divided broadly three categories. One is the organized sectors related, second one is unorganized sector related, one is sub markets related. So, here organized sectors, unorganized sectors, sub markets. Again, it can be divided call money market, treasury bills, commercial banks, commercial bill market, and collateral loan market, and commercial papers and certificate of deposits of markets. These are the Indian money market structures. Next year, broadly speaking, the organized sector and unorganized sectors. And the unorganized sector can be divided into subdivisions. Okay. Now, organized sectors. What is organized sectors? Organized sectors is the organized sector consists of Reserve Bank of India, the State Bank of India, with the 7 associated and nationalized commercial banks, private banks, foreign banks, and rural development, regional rural banks comes under organized sectors. Non-bank financial institutions such as NBFC or GIC and subsidiaries of Unit Trust of India (UTI) operate this market, but only indirectly through the banks and not directly. Next, next is the quasi-government bodies, quasi-government bodies, and large companies also market their short-term supplies, funds available to the organized market to the banks. Next, the cooperative credit institutions occupy the intermediate position between the organized sector and unorganized sectors. Next, unorganized sectors. So these are 4 important points related to the organized sectors. Next is the unorganized sector. What is the unorganized sector? So like that, it is the private sectors, or it is a private sector, like simple. The unorganized sector consists of indigenous banks and money lenders. It is unorganized because activities is a part of the not systematically coordination with the RBI. So organized sectors, the full cooperated coordination with through the Reserve Bank of India, but unorganized sectors is they are not organized by the Reserve Bank of India. It is not a systematical. Next, the money lenders operate throughout the country, but without any link among themselves. But in organized sectors is link related one bank to one organization to suppose SBI, State Bank of India. Throughout India, they follow the same rules. They are given same rate of interest. But in unorganized sectors, so they are in throughout India, but they are not followed same rules. That is the difference. The difference between organized and unorganized sectors. Next, indigenous banks are somewhat better organized because they enjoy re-discount facilities from the commercial banks, which commercial banks, which is without any link among themselves. Next, the indigenous banks are some somewhat the better organized because they enjoy re-discount facilities from the commercial banks, which in turn have a link with the Reserve Bank of India and others. Next, constitutions or constitution of money market and lenders of borrowers. So money market is a center where the short-term funds are supplied and demand. The main constituents of a constitution of the money market are the lenders who supply and borrow the demand short-term credit. So first is the supply of the funds. Supply of the funds. Supply of funds. There are two main sources of supply of funds. One is the short-term funds from Indian money market. Second one is the we receive money from unorganized indigenous sectors. So unorganized sectors. The unorganized sectors is comprise of numerous indigenous bankers and the village money lenders. It is unorganized sectors. Next, organized sectors. Organized sectors, modern sectors. Organized sectors is the modern sectors. They are followed by the Reserve Bank of India rules. They follow the some certain rules and regulations. So that is a common rules throughout India. But unorganized sectors not follow the common rules throughout in India. They follow their own rules and regulations. Next, demand for funds. Demand for funds. Demand for funds means in the Indian money market, the main borrowers of short-term funds, the central government, a state government, local bodies such as municipalities and other villages and panchayatis, etc. The traders, next is the traders, industrialists, pharmacists, and farmers, and import and export of the goods and services, and to the general public. Next, sub-market organization. So the call and notice, short notice money. The call and notice market constituted the core of the Indian money market. Call money represents the amount borrowed by commercial banks from each other for the short-term periods to meet their cash reserve requirements. Those banks whose the cash reserves decline below the statutory requirements borrow from such banks which have the supply, cash reserves, and other items. Next is the interbank and term bank money markets. Interbank means that this bank market is a market in which banks alone, both commercial papers and cooperative banks and participate they borrow the money uh, lend from and each to other for the period over 14 days and generally up to 90 days. The duration of the borrowing period is minimum 14 days, maximum is 90 days. Next, treasury bills. Treasury bills is the short-term promissory notes issued by the GOI, Government of India, a discount general for the 91 days up to 91 days. Next, the commercial bill market. But these are These are the bill of exchange are drawn by the sellers and the buyers and the acceptances. For the These are the bills of exchange are drawn by the seller and the buyer for the value of the goods sold. When once the bill is accepted by the buyer of the goods, it became a legal document acknowledging indebtable. It is a negotiable instrument act. Next is the collateral loan market. It deals with the collateral loans and loan backed up to the society. In this market, commercial banks provided loans against the government securities and bonds of etc. Next, certificate of deposit. The Reserve Bank of India introduced the certificate of deposit such in June 1989. The object to the further within the range of the money market instruments and to give the investors further opportunities to deploy the short-term funds. Next, commercial papers. What is the commercial papers? On the recommendation of the whole working group of commercial papers is introduced in India in first time in January 1990. The need of one minute. Commercial paper. So the company of AIFI All India Finance can issue the commercial papers only this requires a tangible net worth of at least 5 crores of rupees. The working capital fund based limit of 5 crores. A minimum current ratio is 1 is to 1.23 is to 1. The health code of and the minimum credit rating of P2 by A2 in the sizes. So next, characteristics of developed money markets. Characteristics of money market. Developed money market is a relative term which refers to the better organized, more efficient, and more sensitive money market. In other words, the developed money market have greater responsiveness to changes in the demand and supply of the short-term funds in any of its segments. Generally, the extent of development of money market is closely related to the degree of economic development of a country. The money market is closely related to the degree of economic development of the country. The money market of economically advanced countries like England, America, and developed countries, those of underdeveloped or developing countries like India are related to underdeveloped countries. The following are the main characteristics. The following are the main characteristics of the money markets. So one is the presence of a central bank. As the essential requirements for the development of money market is the presence of a central bank which functions as a monetary and banking authority in the country. Next function character is developed banking system. Developed banking system. A developed money market requires the existence of the as well as organized commercial banking system. Moreover, the public should also be banking habits. The commercial banks are nucleus of the whole money markets. Next, third character is availability of financial assets. Availability of financial assets. So effective working of the developed money market requires a regular and adequate supply of variety of financial assets such as bill of exchange, treasury bills, and short-term government bonds. Next, fourth character is existing of submarkets. So, developed money market has well-organized submarkets, each specializing in particular type of financial assets. Next, fifth character of the money market, integrated structured markets. Integrated structured markets. Developed money market as in integrated structure. In other words, its various submarkets are so closely connected that information and funds move easily and quickly from one market to another. Next character is integrated structure of interest rates. Another feature of the developed money market is that the interest rates revealing the different revealing the different submarkets are integrated. Next is availability of adequate resources. Another characteristic of a developed money market is the availability of adequate resources to the finance and the transaction in various submarkets. Next, existence of a specialized institutions. The developed money market is characterized by the existence of specialized institutions specializing in a particular type of assets. Next is the other factors. There are many other factors contributing to the development of money markets. Next, defects of Indian money markets. Defects of Indian money markets. So the in India, organized and unorganized sectors. So the this attachment of the organized and unorganized sectors. Second one, predomination of unorganized sectors. Next, wasteful competitions. Next, absence of all India money markets. Next, in the inadequate banking facilities. Next, shortage of capital. Next, seasonal shortage funds. And diversity of interest rates. The difference, like one bank to one organization to another organization, rate of interest is slightly different, but that is okay. But the irrelevant percentages, like absence of bill market, these are all defects of Indian money markets. Next, measures to the improve the Indian money market. So the measures of improve the Indian money markets. In the view of various defects of Indian money markets, the following are the suggest the economists. Number one, the activities of indigenous banks should be brought under the effective control of Reserve Bank of India. They have suggested one important point. The activities of indigenous, which other private sector loans and services, financial institutions are under control of Reserve Bank of India. Second one, hundis and the money markets should standardize and written in the uniform manner order to develop the all India money markets. Next is the banking facilities should be expanded, especially in the unbanked and neglected areas. Next is the discounting and rediscounting facilities should be expanded in the big way to the developed countries. Next, they are again they are given some suggestions for raising the efficiency of the money market. The number of the clearing house in the country should be increased and they working improved. Next, Reserve Bank of India and Indian money markets. The Reserve Bank of India has taken various measures to improve the existing defects and develops a sound money market in the country. The important point is through the introduction of the two schemes, one is 1952 and one is 1970. Next, a number of measures have been taken to improve the functioning of the indigenous banks. Next is the Reserve Bank is fully affecting the organized sector of the money market. The difference between various sectors of the money market has been considerable reduced. In order to develop the sound money market, the money Reserve Bank of India has taken the measures amalgamate to the more banks or merge with the banks. Next is the working group of money markets. Working group of money market. In 1986, the Reserve Bank of India has set up working group under the chairmanship of N.V. Wahul. Mr. N. Wahul is examine the possibilities of enlarging the scope of money market instruments. The working group submitted the report in January 1987. It has made a number of recommendations for acting and developing of the Indian money markets. Number one, measures and be taken to improve the improve the operation of all money market. The discounting market should be developed with a view to the facilitating the emerging of a genuine bill culture in the country. Next, a short-term commercial paper should be introduced. Next is an active secondary market for government paper, especially 182 days. Treasury refinance facility should be developed. Banks and private non-banking financial institutions should be encouraged providing factories and services. Reforms in 1986 to 2000. So many reforms is there. At, next, market. Next is Indian capital markets. Capital markets in India. Like one is the money market is over. Next is the capital market. Capital market refers to all facilities and institutional arrangements for the borrowing, lending to the term funds. Capital market does not mean deals with the capital goods such as long-term loans provided by the banks and financial organizations. Demand of supply, demand and supply of funds. An ideal and perfect capital market aims at establishing a between the demand and supply of long-term funds. A demand for funds in India, the demand for long-term money capital comes mainly from a private sector, manufacturing industries, or the government largely for meeting the needs of economic development. Second one, supply of funds. The supply of funds for the capital market comes largely from individuals, savers like a banks, specialized in financial institutions, etc. Next, functions and importance of capital markets. So, link between savers and investors. సో ఎవరి దగ్గర అమౌంట్ సేవ్ అవుతుందో అమౌంట్ని ఎవరికైతే రిక్వైర్మెంట్ ఉంటుందో సేవర్స్ ఇన్వెస్ట్మెంట్ పర్పస్ వాళ్ళకి ప్రొవైడ్ చేస్తుంది. సో ఇట్ ఈస్ అ లింక్ లైక్ ట్రీటెడ్ యాజ్ అ మీడియేటర్స్. Second, encouragement to savings. At the same time, one more important function of the capital money market, encouraging the savings. We get the money from more outside, so we save the money, they are given to the other person. Next, encouraging to the investments. So funds is available, we are investment in various places. Next, promote the economic growth. So promote the economic growth is the capital market. The capital market not only reflects the general conditions of the economy, but also and a smooth and acceleratory process of the economic growth, the various institutions, various situations, various phases. Next, stability in the security prices. Stability in the capital market trends stabilize the values of a stock and securities that reduce the fluctuation in the prices. Next, benefits to the investors. The capital market helps the investors, those who have funds to invest in long-term financial assets and to bring that to the buy and sell the securities. Next, Indian capital markets. Indian capital market in independence. After independence, before independence, not there. After independence, here capital market is four categories, right? We are classified in four. One is the government securities, industrial securities, development financial institutions, and financial intermediates like private sectors agencies వాళ్ళని financial intermediates అంటారు. Next, so again industrial two categories is there. New issue of markets, old issue of the market. Like old issue means already issue the shares like a stock exchanges, etc. And financial intermediates can be divided five categories. One is the merchant banks, one is the mutual funds, one is the leasing companies, one is the venture capital, one is the other organizations like all private sectors. Merchant banks these are related to the only business. Mutual funds, their treasury bills, leasings, and venture capitals are related to the financial intermediates. Next,